Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Tuesday, everyone. All right, so we've got a lot to cover here. I really want to kick things off with the economic calendar. Just a quick reminder that we have really what amounts to FOMC Palooza throughout the week. And a couple questions come up this week. Can we really have a sustained rally with as many FOM speakers that are going to be speaking this week? Powell twice, Meester, Williams. Um, we have, let me show you here. We have a new one. Where is he? I think on Friday. Actually, I don't see. Oh, there we go. Waller. We have a lot of members speaking this week. And remember that we are still looking at, when you take a look at what we have on the target rate probabilities graph, right? No supposition, no chatter, no what if, right? What is being discounted? We are seeing probably at the largest increase a very realistic shot at a half-point hike. So the question is, the market may know there's 6-7 hikes coming, right? No meaning this is what's being discounted. Of course, we go from data point to data point, from speech to speech, to fine tune what expectations are. But just because we know the hikes are coming doesn't mean we as investors and traders like it, right? It doesn't mean that the equity markets are necessarily poised for more strength. And that brings me to point number 2. I've been asked a lot of questions about this. So I thought we'd tackle this here in Charts and Coffee really briefly. I did a little bit of this in the mastery, so this might sound familiar to those of you that are there. Being in bullish territory is very different than an uptrend. And I hear people throw the word uptrend around a lot. And I'm going to root this in Dow theory. There's a reason we're still talking about Dow theory 140 years later, right? It's not because he's making continual appearances on CNBC. It's because this stuff works. There's a really easy way to understand bullish versus bearish territory, which is actually different than having an uptrend in place. If we're north of the 200 exponential or simple, really, they're going to be pretty close to one another. But being above that 200, I prefer exponential. That is north of the equator, the 200 being the equator, being north of the equator. That's the bullish territory. But are we really, let's look at something like the NASDAQ. Are we really talking about pretty much a downtrend that's been in place since the second week of the year? Are we really saying that a downtrend that has been nearly 2.5 months long, 2 months long, January, February, and most of March, right? So call it 2 months to be a little bit on the short side of things. A 2-month downtrend is broken because we had 4 days of a rally. So do you see the illogic of, okay, you can break a downtrend in a single candle or even 2, but you do not make an uptrend simultaneously in those candles. This is where a lot of traders get in trouble. Furthermore, tech is still below that 200. So tech is neither in an uptrend, nor is it in bullish territory because we rallied 4 days, right? So let's take another really extreme example, PayPal. My gosh, if I haven't heard so much about how maybe PayPal is bottoming. Who the heck knows? Maybe it is. But this is not an uptrend. Look at this relentless red downtrend since easily October of last year. Oh, but these 4 days completely changed everything, right? Please be careful. Financial media, television I point that way because that's where the dumb box is here in my office. They have to talk about something, and it has to be something new because we like new and shiny as humans. Please remember, new and shiny is dangerous because it's just a matter of having something to talk about. So you tune in and watch the advertising. Please remember, in a lot of instances, we're not seeing uptrends. We're not even seeing markets in bullish territory. Let's separate that from markets that have been choppy, like healthcare, and for the most part have been above the equator. Just use that 200 exponential. Now, if you want to use the propulsion that I use, go grab it, countdowntrader.com. You can download the 200. You actually can download the propulsion, set it to whatever moving average that you want to use. But we have been above that 200 for the most part in healthcare. Very different conversation about bullish and bearish territory. By the way, healthcare is not an uptrend, but it is in bullish territory. So put that 200 exponential. It is going to help a lot. And that's really what I wanted to share with you all here to kick off Charts and Coffee. I don't want you all getting caught up in just ridiculous talk that I'm hearing on the dumb box, which is blissfully muted most days here in my office. All right. So as always, this show is about your questions. So let's get to it. All right. So good morning. Good morning. Lots of great good mornings. All right. So kicking it off with Ronaldo. Okay. So I was trying to see if I moved this screen up, would it cut off? Oh, it does. Okay, good. It cuts off the date a little bit less. Oh, perfect. That's what I was looking for here. To kind of find a good balance between y'all not losing the date on the charts. Okay. Ronaldo asked, did I take the trade long puts on XHB? Ronaldo, that would be an affirmative. Yes. So when I send out an alert and there is a price trigger associated with the alert always. When that price trigger is touched, after I've sent the alert out, know that that's how I am getting in. And that's how I'm letting you all know how to get in. I'm not giving you a, hey, I already bought it alert, right? I don't believe in those. That's not even an alert to me. Because if I'm trying to follow a trading style, I need to know what it is that the trader is going to do and when they're going to do it. And then have at least a little bit of time ahead of that trigger to react. And that's the way that I send out what I call a GPS style alert. So yes, that is, I am in. All right. Next up, Andreas asks, I took an aggro entry on Qualcomm. Okay. What is my take on T1? So I do not have exposure to Qualcomm, but I love what you've done here, Andreas. 200, shorting into the equator, 21 propulsion dot. That's actually really good too. Yeah, I like that a lot. And then what else is working for us here? We have, and you did this, you got a T1 set to 148 and a half. You know, I don't ever think that's a bad idea to have a more prudent first target, but I probably wouldn't put it any closer than 147.85. So you can go down a little bit more to 147.85. And then you've got a volume ledge kicking in closer to 144.10. So is it too conservative? I have a very difficult time saying something is too conservative, but I'm looking at a volume ledge, previous low. Yeah, I would have to say that maybe a little bit. However, think about this in terms of management. One thing you could do is move to a break-even stop at 148.5 if you're concerned about some sort of support at that level. There's no harm in putting your risk management ahead of your target. In other words, you haven't scaled out yet, but you can protect the potential protect yourself from a potential reversal. So yeah, very cool. That's what I'm looking at, but that's another way you could use 148.50. All right. Next up, can we take a peek at Microsoft? Sure. Overall downtrend, I'd rather be short, but Zion Spear, one thing that most of you have probably noticed, whether you get my notes, weekly notes, where we have our show on Sunday, where we talk about the sector and macroeconomic notes, and then we have our Sunday sector show. I think that's what the bot said, hey, Sunday sector show. So I like that. I like the alliteration. You'll notice I have not been focused much on tech. As much as I think that the overall downtrend in the 10-year, whether you're looking at the bonds or the overall uptrend in the 10-year yield, looking at TNX, however you want to look at that, I do think at some point tech is going to be wrong or bonds are going to be wrong. My money's on bonds being right. My money is on this yield and the upcoming rate hikes really starting to chip away at sort of this optimism. I mean, for the life of me, to be optimistic in tech is very difficult. I don't know where there is a lot of optimism. Look, we can have very short momentum based, even scalp type entries, but we're still below the equator, right? So I have a hard time thinking about anything in Microsoft other than the short side. We're at a point of control. That's that solid white line there. But I just think there are better, more intact downtrends out there. So Zion Spear, I say pointing in the right direction. Let's see if we can't find a relative outperformer to the downside. Does that make sense? In terms of, it's what we trade, not how we trade it. I love the short side of this tech market. I'd like to find something kind of like Qualcomm that's got a more intact move potentially to the downside. All right. By the way, gang, we have a promotion that runs until the end of this week. So March 25. If you've been wanting to join and check out what we're doing in the Sector Secrets Mastery, where you get my alerts for my end of day trades, where you get even Monday, Wednesday, Friday, we do some intraday day trading. You get my daily notes. Check that out. First bonus session begins on Monday. So very excited about that. And that particular promotion is going to end this Friday. So I would hate for all you all to miss it. For those of you that have been on the fence, we have a great 1 month way to check out what we're doing. So, a lot of folks said, Rog, I'm not sure if it's right for me. And I really want to make sure, you watch the webinar. Watch the webinar. Make sure this is a process that's right for you. I don't want to waste your time or money, right? So make sure this is a process that resonates with you. And if it is, come check out what we're doing. First bonus session is on Monday. Promo ends on Friday. All right. So next up, Kim says, I heard Jay Powell is speaking again today. Is that true? What time? Yes, we covered that real quickly. And Kim, in the morning, check out forexfactory.com. Click on the calendar tab right there and just check out what's coming and you'll see the whole calendar. This is something that we call hot zones, right? What are those hot zones? What are those scheduled high impact, meaning psychological, and high volatility events that we know are coming? And then the next step is, what do we know is going to be affected? When it's Powell, it's everything. It's dollar, it's yields, it's equities, it's everything. Nothing gets to hide from Powell. So yeah, that's going to be today. And he speaks a couple times this week. So we have, and not just Powell, we have Williams, we have Meester, we have Waller. I believe Ballard was speaking earlier today, sounding very, very hawkish. The Fed balance sheet has expanded for too long, hawkish. The Fed can achieve a soft landing, dreamland. So you take a look at what he's been saying. And one of the most important things he said is really a wake-up call to traders and investors who are thinking Ukraine is even a fraction of the narrative within the Federal Reserve, which is the Fed can't wait for geopolitical tensions to ease. In fact, the geopolitical tensions are making the reason for the hikes even more so. So definitely keep in mind the Fed is not concerned about Ukraine, gang. And anytime anyone says, "Oh, they're gonna pause because of Ukraine," cluelessness, right? Don't succumb to that thinking. It's just flat out wrong. So take a look at those target rate probabilities, and you will see what the most likely path of Fed action is going to be. And I think this week is going to shake up a lot of that thinking about pausing and things of that nature. The Fed has an inflation problem. They know it. They've got still that growing balance sheet. They just bought mortgage-backed securities, I want to say $2 billion last week. So the unwinding of the balance sheet is a goal. It's not an action plan yet. So it's a very interesting place that we're in from a macroeconomic standpoint of the macro with a capital M, which is the Federal Reserve. All right. Next up is, student of truth. I get questions like this all the time. I'm going to be straight up. I don't want to ignore your question. I have no idea. It depends on the standard of living. It depends on where in the world you are. It depends on your monthly nut, right? What do you need? So I really don't have a straight up answer for you. Um, can you trade based on someone else's alerts, right? That's what I want to address. We call the mastery for a reason, right? Because if at this stage of my career, 32 years in, I wanted to manage money, I could. I really don't want to. I have for a brief period of time, and it's absolutely miserable because when you win, that's what you're supposed to do. When you lose, your email and your phone blows up, right? It's miserable. I would never want to do it. I love being a private retail trader. I love having my own money and my skin in the game, right? So then the next thing is, well, Rod, can we see your trades? Of course, of course. But if as you're getting trade ideas or alerts from anyone, you're not learning why they trade, how to position size, how to manage risk, the logic behind the process, I will tell you this for sure, you're doomed to fail because you're not learning A, how to control your own risk because my risk may be different than someone else's. And two, did I say A or B? Well, the second point is that if it's a black box approach, this notion that you're simply going to, whip this thing out, put the trade I have on and go about your day, that's semi true. I think someone like me, and I have these conversations with Trish here in my office. You all know, um, I talk about Trish in terms of, who are we trying to serve, right? We ask ourselves that question all the time. And how are we trying to serve them? I want you all to learn how to do this. Yes, to a certain degree, you can cut down your homework because basically I'm doing it for you, right? That's the truth of the matter. When you let someone else do some of the heavy lifting, you're letting someone else do it for you. But at that point, I'm really not doing you a service if I'm not teaching you how to manage your money. And that's why I love the idea of the mastery, right? Because this is where you get me walking you through the market, but at the same time you're learning. So I hope that's a understandable, fair answer because look, I wish it was as easy as my just sending you out ideas and you just put the trade on and go about your life. What if I retire? Right? Then what do you do? What if whoever you're following says, hey, you know what? I've kind of had enough and you haven't learned. And that to me is not something, if I'm going to leave a legacy in this space, which is really at this point what I'm playing for, I've got to teach people how to do this. And they're going to teach their kids and they're going to teach their friends and they're going to teach, that's what I'm looking for. So I hope that makes sense. All right. It seems like the S&P stopped at the 200 SMA. Is the SMA stronger than the EMA? I won't say that one's stronger than the other. I think they're both really important. So let's say we go pull up the SMA. Let's see here. Simple. I don't actually have one on my simple moving. I actually don't have one on my screen right now. Simple moving average. All right. So let's see. I just need the one. Let's see what this one is. Oh, that's a whole mess of them. So let me answer that question without getting too bogged down and trying to change my chart. Keep an eye on both. There's no harm in keeping an eye on both. I think there's a huge group of traders that watch the SMA. That's probably a little bit more popular. But if you're a fan and a devotee of recency bias, as I am, one of the cognitive biases, we tend, and they'll probably, if you were to look at 10 charts, you'd probably find there's a pretty even split between the EMA being in play and the SMA being in play. So I like recency bias, and EMAs are weighted not evenly like an SMA, but more recent data is more heavily weighted. And so because it sort of, I think, resonates with me in terms of that more recent data being more heavily weighted, that's why I use the EMA. Any thoughts on shorting QQQ? Jeremy, yes, but not yet. I think there are individual stocks and individual sectors that probably look a little bit better. I will I will definitely continue to look for tech to move lower, but I'm going to have to be a little bit more discerning. And I think, let me give you one place I am looking, and that is XLC. XLC. So find the best example of a downtrend that you can. And that's the best advice I can give everybody. If you've got a direction you're pointed in, I love the direction, Jeremy, that you're pointed in, tech, right? Now, what we trade is more important than how we trade it. Find the what. Find the best examples of downtrends, double red JT multi, below the propulsion, SMA or EMA, right? That's where we're going to find, I think, higher probability. All right. So I hope that makes sense. Thanks as always for all the questions, many of which I did not get to, but we are here every single morning at 9 a.m. So I look forward to seeing you all tomorrow. Be good to each other, gang. I'll talk with you soon. And remember, we've got the Simpler stream going on here for people who aren't members yet. Check it out at the Simpler Trading YouTube channel. Be good to each other.